Well, we've just heard from Jay Powell confirming that the Federal Reserve is holding rates for an 8th straight month. Our own Jennifer Schonberger was in the room, of course. She got in a question there and brought up the rear here, and she's joining us live from Washington. So what was your impression there from being in the room, from sort of seeing Jay Powell in person, and as you've had a few minutes at least to digest what you heard?
Just a couple minutes there, Julia. Yeah, I thought it was very interesting that Chair Powell and the Fed don't really seem to be fazed all that much by the hotter inflation data that we saw in the first 2 months of this year. He says it really doesn't change the overall inflation picture for the Fed all that much. Now, does it inspire greater confidence? No, not exactly. Take a listen to what he said.
We have it at currently well below 30 basis points core PCE, which is not terribly high. So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point.
And now Powell would not show his hand on the timing for the potential first rate cut and whether June may be even pushed back. When asked about that, he just said decisions are going to be made on a meeting-by-meeting basis, though I thought it was interesting because the chairman used language that he's been using all year to categorize timing, saying that it would be appropriate, quote, at some point this year to begin dialing back policy restraint. He didn't shift to using language like later this year that some of his colleagues have chosen to use. So that indicates to me that June is still very much in play if the inflation data softens some more from here and continue following as they have when it comes to core PCE on a month-over-month basis. Now, on the balance sheet, the chairman said that the members of the committee did have a discussion on this, but they did not make any decisions today. They believe, though, that it will become opportune to slow the pace of quantitative tightening, quote, fairly soon. That doesn't mean, he says, though, that the Fed will end up with a larger balance sheet. In fact, they could still end up with a smaller balance sheet. Guys?
Jen, you've been in a lot of these pressers, you've covered them so closely. Anything from the meeting today, anything Jay Powell said that surprised you, Jen?
Anything that surprised me? I mean, I thought it was interesting that he just would not touch timing, and that even though they have upgraded their assessment of the economy and inflation, that they are still retaining 3 rate cuts this year. Having said that, we did see some of the doves that were seeing 4 rate cuts previously back in December now coalescing more towards that median of 3 cuts. But for the most part, the fact that they still see easing that much, I think, is quite interesting and telling, given that he also said that they don't feel the holistic picture for inflation has changed all that much, even though we've had those hotter inflation data for the first 2 months of this year.
Jen Schonberger, thanks. Appreciate it.